The best investments are the ones that are incredibly hard to make. When I bought Bitcoin when it was at around $4,000, or when I bought Bitcoin when it bottomed out in the recent cycle at around $16,000, when I bought Bitcoin at these times, it did not feel easy whatsoever. Because when you're buying Bitcoin at those times, nobody else wants to buy it. That's why the prices are low. You have to be 100% contrarian, right? You have to be buying when everybody would declare you totally insane to buy at the time. So this is how it goes, right? There is this big bull run. Everybody gets excited. Everybody buys Bitcoin. Prices tend to rise for a while because past performance does, at least in the short term, predict future performance to a degree. There is a real momentum effect, especially in crypto. So those kind of buys are relatively easy. But when we are crashing, when we are going down in the price, and then buying, especially when everybody is super depressed, when nobody wants to hear about crypto, when nobody watches crypto YouTube, that's actually the point in time where you get most profitable entry opportunities. Currently, we're obviously not there, right? We're very close to all-time highs. We are nowhere near the bottom. And so buying right now doesn't even feel that bad. But when you're buying at the bottom, psychologically, it's super hard. When I bought at these bottoms, I'd of course tell this here on the YouTube channel, but I wouldn't talk about this with my friends. I wouldn't talk about this with my relatives because, again, they only have a view very distant from the asset and they just hear on the news how Bitcoin will crash to zero, how Bitcoin is a scam. Or it's a very stupid idea to buy something that volatile. So it feels almost embarrassing to buy. It feels like something you don't want to tell anybody. Everybody is super proud to talk about their investments when it's up, but when it's down or when you're buying in a very depressed market, nobody is proud of that. It's very tough. And so people say just dollar cost average into Bitcoin, right? Just buy a bit of Bitcoin every month and ride it out through the waves, which is kind of true if, of course, your allocation is still in line with the rest of your portfolio. Sometimes when you dollar cost averaging into Bitcoin and then Bitcoin does a 5x, and suddenly you've got that big of an allocation to Bitcoin that you probably want to sell some Bitcoin and reallocate some to maybe the property down payment or maybe to stocks, etc. So you want to potentially rebalance your portfolio to be just a bit less risk on because you started out with a small allocation, suddenly it's that big. So that kind of makes sense. But overall, you're pretty proud of your investment. You're pretty proud of what you've done. When things go down, continuing to dollar cost average is pretty tough. It's tough for several reasons, right? It's tough because of this psychological effect. A lot of people tell you, don't buy now, it will drop further. It's also tough because there is sometimes some correlation between the general economy and the availability of capital, how much you can actually put in. When there was the COVID handouts, that was when Bitcoin started to rally, right? Before the COVID handouts, there wasn't a lot of liquidity floating around. This is when you should have actually bought. After the COVID handouts, prices suddenly shot up and you shouldn't be buying at that point. So there is a bit of correlation between availability of capital and prices. There isn't as much capital floating around when prices are low. So continuing to buy in might be hard because you might have just lost your job or because you might have not gotten that bonus, etc. So it's hard psychologically. It might also be hard economically. So what's the solution to all of this? There's several ways to solve this, right? One way is to simply set up an automatic purchase every month, right? That you don't even do manual purchasing every month. You don't really think about the dollar cost averaging. There's already something happening in the background that's buying for you regularly. There's ways to set this up on centralized exchanges. You can potentially also set this up with your over-the-counter dealer. That's solution number one.
The main problem with crypto YouTube is conflict of interest. Too many YouTubers shill garbage, promote garbage, and fill up their pockets in the background. Not this channel. Instead, there's simply the offer where I share my skills, my perspectives to you, and where I also share direct access to me, where you can ask me any questions. Feel free to check it out. The premium membership link is down below.
Solution number two is to take out a loan today and buy Bitcoin. Right? I wouldn't necessarily do this today because the market as a whole is in profit quite a lot. I would do this once the price is closer to the realized price. The realized price of Bitcoin is currently at around 30,000. So you don't want to necessarily buy when everybody considers taking profit, but you do want to buy when the market in aggregate is in losses. And that's when the price is below the realized price. So taking out a loan at that point in time and then being forced to buy into Bitcoin every month because you already bought beforehand and now you're simply just paying this off is another opportunity. But again, for that, you have to be somewhat safe in timing it right. And most people don't really get that right because, again, there is a correlation between attention on the asset and the price of the asset. When the price of an asset is high, then attention is high as well, right? The media talks about Bitcoin doing new all-time highs. When Bitcoin is at lows, nobody wants to hear about Bitcoin. Nobody watches crypto YouTube. Nobody watches the TV shows that talk about crypto. Nobody watches the news, or the news even don't talk about crypto. Right? So there is a correlation between price and attention. When prices are up, everybody looks at something. When prices are down, nobody looks at it. And so you have to be somewhat contrarian in this, right? You need to have attention on an asset when nobody looks at it. You need to buy in even with leverage when the price is below the realized price. And then you force yourself to pay off that loan over whatever period of time is most justifiable to you, right? You need to make sure that the monthly payments are very easy for you to serve, right? That's the last thing that you want, that you take on more risk with your personal finances and you in the end can't carry that risk, right? Only take as much risk as you can afford. If currently the price of Bitcoin crashed a lot and you've got strong enough of a conviction to buy in, maybe Bitcoin suddenly goes to 20K, everybody abandons Bitcoin, but you still want to buy, then you can do this for a very large amount, an entire year worth of salary, and pay this off over 6 years. Or you can do this for a smaller amount, right? Maybe just 3 months of salary and pay this off maybe over 1 year, right? Depending on how much risk you actually want to take. There is some kind of variability in this, right? Don't over-lever yourself, of course. Yeah, explaining things like this out of the ether is relatively easy. Just try to remember this, right? Try to remember when prices are low, nobody else is looking at it. Talk about it with your friends at the point in time. See how they are reacting. When nobody wants to buy, then probably you should, right? You want to be contrarian. You want to buy something when nobody else wants it if you believe that that something is going to still be a thing in 10 years from now. Most people don't believe in it. But if you are better informed than most people, then maybe you've got a real and strong case to make a massive bet. Money is made when most people are wrong and you are right. And you can only be right when most people are wrong if you are more skilled than others, if you know more than others, if you follow the numbers better than others. You can only be better at picking the bottoms and the tops if you know things that others don't think. If the price is currently low, most people think it will continue to go down. If the price is currently high, most people think it will continue to go up. But if you can pick the bottoms and tops better because you look at blockchain analytics, because you have some data most people aren't considering, then it is possible to become part of the minority that actually extract value out of the market. If it's your first time here, feel free to subscribe. I publish this daily. A like would be very much appreciated as well. Feel free to also check out our Telegram. There is a Telegram link down below. Looking very much forward to chatting with you in Telegram. Cheers.